Hey guys, Anthony Beckham here, and today we're going to be giving you the Roseburg, Oregon real estate market update. We're going to be talking about what's changed over the last few months and what we expect for the rest of 2024. I run a local real estate team selling over 100 homes a year, personally invest in the Roseburg real estate market, and am a lifelong resident of Roseburg, Oregon. So to say that I obsess about the market and what it's doing would be an understatement. So let's go ahead and hop into the biggest Roseburg real estate market changes. Since the sub 3% mortgage rates of 2020 to 2021 are long gone, things have changed quite a bit, most notably days on market. In 2021, median days on market was only 13 days. 2022 median days on market was up to 22 days. 2023 median days on market went up to 36, and now for the first handful of months of 2024, we're looking at median days on market of 42 days. Looking at the data, we can see days on market has increased by 3x from 13 days all the way up to 42 days over just those 4 short years, which whenever you say days on market has tripled over that short period of time, sounds a lot worse than it is, because if something goes from being on the market for 1 day and now it's on the market for 3 days, really, it's not that bad. We basically have just transitioned from a super crazy market over the last few years into something that is more balanced. Real estate inventory is measured by how many months it would take to sell all homes currently on the market at the current absorption rate, which is just how fast buyers are buying homes. So anything that is under 5 months inventory would typically be considered a seller's market, where anything that's above 6 months of inventory would be considered a buyer's market. As of today, there are 89 homes with a Roseburg address that are currently for sale, which during the low interest rate craze, we saw it get down to only 42 homes for sale. So even though there are twice as many homes for sale here in Roseburg as there were during the peak of the seller's market, we've just gone from 1.5 months inventory to around 3 months inventory. So that would still be considered well within the range of a seller's market and still be considered relatively low inventory. So back in the good old days of 2020, we had a median price point of $235,000 and an average price point of $260,000. By 2021, median sales price had gone up to $270,000 with an average sales price just under $300,000. By 2022, median sales price had gone up to $306,000 with an average sales price over $350,000. So you can see that increase from year over year between 20 to the peak in 2022. Then in 2023, median sales price went right down to $300,000 with the average sales price going down to just over $325,000. In 2024, we're at $300,000 median price and average sales price being just under $325,000. So that tells the story right there, where we see this crazy increase in prices from 2020 to 2022. And then as interest rates start to go up, things even take a step back from the peak in 2023 and essentially have stayed just about right at those same numbers into 2024. So the long and short of it is, if you're a seller, you're in luck, because sales prices have remained relatively stagnant over the last 18 months, coming down just a few percent from those all-time highs. Average days on market is still somewhere around 45 days, and we're still in a low inventory market. But unfortunately, if you're a buyer, things are double hard right now, because not only are prices remaining just below those all-time highs, but now we have interest rates between 7 and 8%, which would have been considered hard money loans just a few short years ago. So real estate is just about the most expensive it's ever been, as well as pretty much everything else: your loaf of bread, groceries, your utilities, your insurance, and your rent. So even though that crazy low inventory market was considered a seller's market, my argument always was it was both a seller's and a buyer's market, because buyers had these crazy low interest rates, and just the overall affordability and appreciation of the real estate market made it a good time for everybody. So looking back, I think we can all agree that it was a no-brainer to buy, and well, that was the very perfect storm that made it to where our median average sales prices went up like $75,000 in that short amount of time. Nobody has a crystal ball, and I don't pretend to have one either, but what I will say is that I don't see prices rising anytime soon. If anything, they should probably continue to stay stagnant, and if we start to see an oversupply where days on market and just the overall amount of listings continues to increase with inventory, then that's where you might start to see some downward pressure on pricing. The only way we're gonna see it head in the other direction is if we get another artificial lowering of interest rates, which then creates this big buying frenzy again. And I don't know how likely that is. It's probably more likely to stay put, or like I said, if supply continues to increase, starting to lower down. So my advice to sellers, don't sell unless you have a good enough reason to. I mean, if you're just wanting maybe I could use an extra room, I could use a little bit bigger yard, I would say it probably makes sense to stay put, because if you go moving, you're gonna lose that 3% interest rate and get into something that has more than double, which means the affordability is not nearly as good. But the bright side is that values are still favorable, and it's not a bad time to cash in on your equity if you have a moving scenario that makes sense. If you're a buyer, my advice would be to act cautiously, because you got lenders out there saying stupid stuff like date the rate or refinance to 3% here in a couple years when it goes back down. Well, my friends, that's what we call gambling, because nobody knows what interest rates are gonna be and when they're gonna be them. And what if interest rates come down, so you wanna refinance, but values come down with it? And then you can't refinance because there's not enough equity. It can be hard to think on a long enough time horizon, but let's just think about grandma's house, for instance, that she bought 30 years ago and her payment was $400, but all of her friends were renting for $300. Well, guess what? Those rents kept going up over the last 30 years, and now that same house is $2,000 a month of rent, and grandma's house is now paid off. In these last couple of years, she was just paying a few $100 a month to live there. Now, I would much rather be in that position than the renter long-term, but of course you have to have a long-term plan to hold that real estate for it to make sense, because in the next 2 to 5 years, we don't know what's gonna happen, but the next 10 to 20, it'd be pretty damn hard to lose. Personally, I'm still buying real estate here in Douglas County. I think that it's a great long-term investment and makes sense over the long term. We just gotta make sure that the deals pencil out and that we can afford what those payments are now and that they make sense even at today's interest rates. If things get better down the road, that should just be icing on the cake. But remember, getting rich in real estate is a get rich slowly but surely game. So the longer you hold, the better off you're gonna be as you get to your retirement here in Roseburg, Oregon. So if you guys are thinking about buying or selling, give me a call. We would love to hear from you. I appreciate you guys watching the video. Don't forget to subscribe for more content all about living here in Roseburg, and we'll see you on the next one. See ya.